So here we're looking at the weekly chart of GJ, or the British pound, Japanese yen, and this is what it looked like before this week that just passed traded. So this is what we would have been looking at before last week, and I have marked on there some equal highs to the left on the weekly and the daily chart. We're going to look at the daily chart here in a moment, but these are these equal highs to the left, right? So that's the most recent equal highs, and that's very important to take note of the equal highs and the equal lows that are on your weekly and daily charts. So here's the daily chart showing you a close-up of those equal highs, okay? And you can see they're real clean equal highs. And this is what you need to know about the equal highs, okay? And this is like smart money concepts. I learned this from ICT or whatever, but if you look at these equal highs, here above the equal highs, there are buy orders to be absorbed, okay? There are different kinds of buy orders. There are stop loss orders up there from people who went short, right? People who sold the market there have their stop loss orders, which are buy orders above those equal highs, okay? And also there are breakout traders who have a firm belief that if price trades above those equal highs on the weekly chart and on the daily chart, then it will continue to go higher. So there are different types of buy orders there to be absorbed. Based on that, I might believe that the market is going to reach up to take out those equal highs to absorb those buy orders that are sitting there, okay? And I would be waiting for Monday and Tuesday to trade. I want to see the swing low down here at the bottom where we're at, where I have marked off it's in that zone. I want to see it trade higher to lock in that swing low and more solidify my trade idea or my thesis, my directional bias that we're bullish, right? Because we're setting that swing low. Now I believe we're going to take out those equal highs here on the daily to absorb those buy orders, right? That's super important to sort of be able to put that story behind the price action that you're seeing. You know what I'm saying? So that's how I'm looking at it right now. I'm going to show you what actually happened this week, the whole week, on a daily, like on an hourly chart, so you can see what happened day by day, Monday, Tuesday. Here we're looking at the hourly chart of the previous week, the last week that just traded, okay? So I had looked at the weekly chart, looked at the daily chart, came up with my directional bias that I believed price was bullish. It was going to be pushing up to take out those equal highs to the left, right? And you can see there on Friday, the 15th, or whatever date it was, right before the 16th on the chart, Monday. That's Friday. It closed in breakout to the downside, okay? When Monday trades lower and then rejects and closes up high, this is sort of locking in the swing low that we were just looking at on the daily and on the weekly, okay? That up closing day, that it's a green candle on the daily, closing higher, it's locking in that swing low, okay? And sort of telling us, okay, we are bullish, at least for now, right? Tuesday opens, trades lower than the closing price before ultimately catapulting to the upside and closing higher than it opened, okay? Now, what you have to understand, when the market opens up, like on Tuesday, okay, it opens and then it trades lower, it trades below closing price. Anywhere below closing price, because we are bullish, right, for the week and for the day, anything below closing price is considered a discount price area, okay? Because if you look at the previous day, if you look at Monday, the 16th there, okay, it has that entire range, and you can see how high it was when it closed, okay? That means, it's a little pricey. It's on the upside. So when it drops back down into that range, anywhere beneath yesterday's high and yesterday's closing price could be considered a discount area. And then Tuesday closes up high again. And then Wednesday opens up and trades well beneath closing price of the day before, right? And it trades all the way back down to almost, the low of the previous day, at least into that low of the day area. And it's right in a timing window. We'll take a look at that. It's right at the London Open. Okay, then you look at Thursday. You can hardly see it on this chart, right? But if we went into like a 15-minute, you could see that it also trades beneath closing price for a little while before catapulting to the upside, okay? And then we have Friday. Friday is when I took my trade going into the London Open. We opened high, we traded beneath closing price, we hit some resistance, and then we hit some resistance again. Then price went up a little bit, tried to go back to the low of the day level, but it couldn't quite make it. So I entered my buy in a discount area, and price really catapulted straight up. I locked in a 15% profit on my account, and it was good. That was the only trade I needed to take. Now you can see, well, I guess we'll talk about that here in just. Here, I just wanted you to see these blue horizontal lines that are now on the chart represent the previous day's high and low. So on Monday the 16th, the previous Friday's high and low are represented by those two blue horizontal lines. And then Monday's high and low are projected on a Tuesday. Tuesday's high and low are projected on a Wednesday, so on and so forth. And you can draw those levels in manually, easily by yourself, okay? But I just want you to see the relationship between the high and low and the closing price as price trades throughout the week in this bullish template, okay? So I just want you to see where the high is. You can see how we open up high these days, where we open up really close to the previous day's high, right? That means we're up high, and then we trade down lower beneath that closing price into that discount area. Now, here on the chart, you can see a blue highlighted section and a red highlighted section, okay? The blue highlighted section represents the London Open. The red highlighted section represents the New York Open, all right? And it's just the first 3 hours of the session, okay? But if you look closely at the low of each day, when we trade below closing price and we get down to the low of the day, more often than not, that low of the day is put in London, with the exception being on Thursday, where the low of the day occurs in the Asian session, because we just open and go straight up with no time to wait, all right? Like we just go down just a little bit and then straight up in the Asian session. That is going to happen about once a week on a pair like this, right? An Asian cross pair, the British pound and the Japanese yen. So you might get some movement here and there in the Asian session like this about once a week. You can look for that. I learned that from Stacy Burke, right? But you can see that the low of the week is put in place in a bullish template like this, usually Monday or Tuesday. And you can see here, Monday trades lower. The low of the week is put in Monday's London session. But oftentimes, per ICT, you'll look for the low of the week to be put in place between Monday and Wednesday, and really optimally between Tuesday's London Open and Wednesday's New York Open, okay? If you go back through your charts and look, and the same is true if you're in a downward template, you're looking for the high of the week 70% of the time to be put in on Monday, Tuesday, or Wednesday in the London session. And you can see this is a perfect example. This is not a cherry-picked example. This is last week, and I took a trade on Friday that we're about to look at on the lower time frame so we can actually look at my entry, and I want to tell you how I decided to take my entry. But I hope that just this little bit, by looking at price action right here, seeing how price opens up each day in this bullish or upward template, trades beneath closing price of yesterday, and then catapults to the upside, okay? So let's look at that trade. So here we're looking at the 5-minute chart. This is the trade that I took with my exact entry, stop loss, and where I got out of the trade, where I exited, okay? Now, I hope that you can see right here, okay, the red horizontal line there represents the previous day's closing price. So that's Thursday's closing price projected onto Friday. You can see that we traded lower. We had a low of the day put in place in Asia. Then we had a high of the day structure put in place also in Asia. During that gap time, we traded lower, put in peak formation low there in the gap time. Then we put in a high. Then we came back down. We made some equal lows here on the 5-minute chart, right? Which means that price tried to go lower but couldn't get any lower. It was rejected. And you can see right where my trade begins, where my entry is, we tried to get back down to that low of the day level, but we couldn't get there, and we rejected. And that's where I got into the trade. And you can see we went down there and we rejected a couple more times before the trade actually popped off and just flew up there, you know what I mean? And so I hope that from you just looking and listening to what I just was explaining to you, okay, we started on the weekly and the daily time frame. We found some equal highs to the left on the daily and the weekly time frame. We understand that there are buy orders above those weekly highs and that price might be drawn to that level in order to absorb those buy orders, okay? So we formed that bullish opinion that of the direction, right? We think that price is going to go higher towards those equal highs. It doesn't have to get there this week or today, but it might be headed in that direction, right? So we let Monday and Tuesday trade, and we can see the bullish price action pattern, right, in the weekly template of trading below closing price. Because listen, most candles have wicks on one or both sides, even on the daily chart, which means that each day you can suspect price will trade into the previous day's range before going higher or before going lower, right? It will leave a wick. That wick is price trading into the previous day's range or whatever. So you can see all of that, and you can see why on Friday I'm convinced that we're going to go higher, because we've been going higher. We're committed to this pattern every single day this week, right? So I'm just looking for that same pattern to play out, and it played out beautifully here. If I could show you the time, you would see that trade took off right at the London Open. Like, I think it was right at like 2 o'clock or right at 2:30. It just went, okay? You go back on your charts and you look at it, right? So you could have timed it with the timing rotations of the new hour or the new 15-minute candle. So if we kind of put the narrative behind the price action on this day, on Friday, okay? When price trades below that closing price of Thursday, we're in a discounted area, okay? We're at a discounted price because this currency pair traded, at 189.50 at the close. So that's where it's at. So if you get in below that, right, and we're supposed to have a higher close today than the open, if you get anywhere beneath the closing price, you've got a great discount. You could have bought into this anywhere beneath closing price and had a stop loss, at a reasonable level, 25 pips or something like that, and you would have been safe. If you would have bought anywhere in there, or even bought at closing price. You could have waited, right? If you were still sketched out, you thought price could still trade lower on Friday and just reverse. You could have waited until price went through closing price in London, right? And then gave that slight pullback in the middle and then got in and caught half of that big momentum candle. You know what I'm saying? But the setup was there. It was extremely clear. I hope that by watching this damn near 20-minute long video, it helped you out or helped somebody out to be able to see this. And you just need to be able to develop some confidence. That confidence is going to come from that higher time frame analysis, bro. If you can look at the daily and look at the weekly and form an idea of where you think price is going on those, then all you're doing when you zoom into a 15-minute or an hour time frame is looking for this sort of pattern, that trading below closing price to ultimately trade bullish by the end of the day in a bullish template, in an upward template, or you're looking for those downward moves where we're trading in the beginning of the day above closing price to ultimately close lower than the open. So before we go, I want to talk to you about the risk management aspect of this trade, because that's extremely important. All right. You can see where my entry is. You can see where my stop loss is, represented by the bottom of that red box there, and where I exited the trade at the top of the green section of the box, right? So on this trade, I risked about 3% of my total account balance, okay? And when I closed the trade, I was at roughly a 15% gain on the account. A lot of people say you should risk 1% or 2% when you get into these trades, right? And that is essentially what I did here. The only reason why it's 3% or so is that I just widened the stop loss a little bit beneath those structural lows there on the 5-minute, just to give it a little breathing room to account for the spread and you know what I mean, maybe a last poke down there or something like that, right? So I just did that for safety, but I would have been willing to close this trade if price dropped anywhere below or closed beneath that structural low just there to the left of the bodies, right? If it closed in the range of the wicks there to the left, I would have been willing to close that trade, and then I would have taken a 1.5% to 2% loss there. So I was still, in that area of 1% to 2%. But I would say that 3% is just fine, especially with the level of confidence I was getting into this trade with, seeing how the week had been trading so far, right? I got in there, and really just, nailed it, okay? The exit was just pretty simple, okay? I just woke up and closed the trade when I was in that much profit, okay? I put a target above the previous day's high. I put it up there pretty high. I wanted to be able to wake up and still manage this trade unless it went, really high up there. So I just let it run. I'm trying to get better. I'm trying to improve. I'm trying to hold my trades longer. A lot of the times I'll shut it down around a 5% gain on the account or something. But this one I let it run, and boy, am I glad that I did, okay? Now, if you like this kind of video, please like the video and let me know down in the comments, man, if you have any more questions, or, I'm new to making trading content or whatever. And this trade, of course, is on a demo. I am not trading live yet. I need to... I'm still developing my consistency. I'm practicing my aim, essentially. I'm getting a little more precise with my entries, as you can see, and with my stop losses, and I'm learning to hold them longer. So I've got the strategy. I'm trying to lock it in, basically. You know what I mean? I still need to see a little bit more consistency before I go live, and I actually have some real life goals that I need to accomplish or achieve before I go live. And these are all decisions I made in the beginning of my trading journey about a year ago now, okay? But I've been having green days, and really, I'm not worried about the days. I've been having green weeks for about a month now. I've been keeping it solid, bro. So things are looking up for me. You know what I mean? I've been having a lot of progress. Shout out to Stacy Burke Trading. Okay, that's where I've learned most of the stuff I've been learning is from Stacy Burke. And just now, I've just started to sort of dip my toes into ICT. And like I said, that's where I was getting the ideas of the buy orders and those stop losses up there at those equal highs on the weekly and daily and stuff. Okay, I know ICT gets a lot of hate, but I just kind of turn off all the noise and just pay attention and see if I can get anything from what I'm hearing. You know what I mean? I'm just an open-minded person, so that is what it is. So until next time.